What is going on, everybody? This is the top stocks to watch for the week of October 17th. Let's get right into the video. Here we are on our fundamental drivers for this upcoming week. Last week, we had our CPI event. I'm sure you heard of it. Our inflationary data year over year came out at a 8.2% surprise over expectations. And our month over month was also up above expectations. Now, moving into this week, we do not have any news besides Monday 8:30 and Thursday 8:30. We have our Empire State Manufacturing Index and our Philly Fed Manufacturing Index. But besides that, a very clear week after a week full of news. So it's nice to see this, and hopefully this week there is some clear sailing in terms of our trading, because that is much needed after our last week, and our next week is full of news. Not this next week, meaning the 16th or the 22nd, but rather the week following. So this week, pretty clear. Just be aware of Monday and Thursday pre-market, and that's it. So as you can see on screen right now is our earnings in the S&P 500 for this upcoming week as well. Moving into our technical analysis for this week, we had a very strong day after our CPI release. CPI moved us lower in the pre-market. We opened up and we had one of the strongest rallies we have seen in years. Maybe not years, months. The day after, we had a subsequent very, very bad day, obviously, to make up for that move. And if you are a fan of Elliott Wave Theory and or you watch this channel and listen to me rant about it, you'll know that this is very, very normal because we were looking for an ABC correction. All corrections form in three waves. Normally, that is a zigzag pattern, as you can see here. If you're not familiar with those, be sure to go watch the videos on the channel where we go over Elliott Wave Theory. But we had wave A, which was our CPI day. We filled that gap and had our wave A to the upside, confirming that our impulse wave to the downside has completed over the last couple of days and weeks that we saw wave 3 pretty much since October 6th. We saw this impulse to the downside. Confirmed the wave has been concluded. Now we just had wave B on Friday, and I am expecting some bullish price action in the early part of this upcoming week. I personally swung some Apple calls that I call out in OBR, and I am still expecting us to move higher. So you'll see that I have a very similar wave count on Apple. Overall, we had a wave to the upside, a B wave, and then we are going to expect a C wave. C wave can take us up to around the 375 range, all the way up to 380 or maybe even 390s on the extreme, but I'm not expecting us to go much higher than that. QQQ, obviously a very, very similar price action pattern that we saw here. We came up to retest our yearly lows, bounced off of that for wave B, and I'm expecting us to make a push to the upside. If we instead break to the downside and make a new low for the year, that would be so bearish. This is breaking beyond anything any of us have expected in terms of the intensity of this correction, and it would definitely cause us to question our current wave counts, as if we do make new yearly lows, we will most likely see something much more extreme than we were first anticipating. If we go over to the S&P 500, the actual S&P 500, not the ETF, SPX, you'll see right here I have the 2008 overlay by these blue bars. We saw in 2008, we are exactly repeating history, which is quite scary. We bouncing off of this weekly support fractal. Let's pull up this weekly support fractal that we formed back in 2020 in August. We bounced off of that for this weekly candle close, a beautiful bounce, just like we saw in 2008. Now, if we follow this 2008 fractal, we will see a very strong bounce in the coming weeks, followed by one of the most intense declines of the decade. Again, I'm not saying this is going to happen. I've had to preface this in every video, every time I'm talking about this fractal. We're not sure it's going to happen, but it is ignorant for us to not pay attention to it because it is following exactly. We say many times that history doesn't repeat itself, but it rhymes. In this situation, history is repeating itself. This catalyst that could send us lower could be a slew of different macroeconomic data events right now. It could be a bank failing. It could be a nuke going off in Ukraine. It could be anything. Matter of fact is we are lining up perfectly to 2008 and we need to keep an eye on it. So expecting some bullish price action out of SPY and QQQ this week. Now we can look at some of our other names as always. Apple following the same pattern, right? An ABC correction kind of move that we're seeing here right now play out. I'm expecting us to move higher, just like on SPY. BABA, very, very similar price action to everything we've been seeing. Chinese stocks, I think, are going to rally this week. NVIDIA, same thing. Everything is following the same kind of corrective price pattern. That's because our main indices have been doing so, except for Tesla. Tesla has made that incredible bullish engulfing day that we can see on the daily chart, right? We had such a strong bullish engulfing candle off of our prior yearly low from May. And then we had one of the worst days for Tesla we have seen in a while, posting a negative almost 8% day, completely engulfing that bullish candle. Tesla looks absolutely terrible. This was a beautiful play we called out for you guys right here at 265. We've been short ever since, and we've been making a ton of money. I hope you guys were able to catch that. Earnings are coming up for Tesla, so be aware of that. Now, looking at oil, we called for a rally this week, and that's exactly what we got. We had our rally in oil. I'm expecting us to continue to the upside after we conclude this corrective pattern that we're in now. And then we can go back to look at our defense stocks that we talked about last week, which we were expecting some bullish price action. And we were able to see that play out as well. Initially, we saw a nice little pump followed by a pullback and then another move to the upside. So I'm expecting us to break higher on defense stocks. LMT obviously performing under what we were initially expecting after we had that move. Right, we were expecting a breakout from this wedge to lead to some upside, which it did. There was two moves to be made on LMT, either pre-market Monday or the following day, and both would have been very, very nice plays. But after that, we unfortunately dumped. But I'm still expecting us to move higher, perhaps after LMT's earnings, which are upcoming just in a couple of weeks. Actually, just in a couple of days, we should see LMT's earnings this week. Bank earnings were something to definitely take note of in this last week. A lot of banks blew out their expectations. Some banks not so much. JP Morgan was an example of a bank that did very, very well. Morgan Stanley did post positive earnings except for a decrease in revenue, a negative 2.3% decrease in revenue. Although we had good earnings, we actually fell quite hard, 5% on Friday. So definitely mixed news. I think right now macroeconomic data is driving the market. Technicals are in play, but not as much as we have to deal with so much news events. So be careful. Keep your eye on the highest probability plays. Right now, I think is a great time to be stacking cash, making a move to position yourself for the next bull run, and we may see a capitulation shortly due to that S&P 500 fractal that we were just looking at from 2008. Definitely on the table. We need to keep an eye out, so be sure to do that. If you enjoyed this video, please like and subscribe. We greatly appreciate your time. We greatly appreciate your attention as always, and we'll see you in the next video. Happy trading and good luck this week.